450 billion AI inferences per day on the latest mainframe we just announced this quarter, the Z17. Think about using that in financial systems to help reduce fraud. So that's an incredible area of innovation. On quantum, part of the reason we announced the huge investment last year and into quantum, and we just brought out the Quantum System 2 this year, is because we are very excited where that will go. That's an area in which we believe the US must and can lead on quantum computing, both for national security, but also for competitive advantage and for growing a business.
And as their competitive advantage continue to grow here in the United States, you've just unveiled a huge amount of investment into the US.
Yes. So we put $150 billion here into the US because we believe that if I look at AI, I look at hybrid cloud, and I look at quantum coming, the growth opportunities are here. So we want to invest to take advantage of these opportunities.
IBM Chairman, President, CEO, Arvind Krishnan, live from Think. We very much appreciate your time today. Now, we're also watching shares of other providers. One of the partners that Arvind's offering right now is ServiceNow. And look, its flagship generative AI software product, dubbed Now Assist, apparently is going to hit $1 billion in annual contracted business by the next year. Shares off by 0.6%, in line with the rest of the market. More next. This is Bloomberg Technology. Let's get back to the state of the markets. Currently under pressure, we're still trying to consider what the tariff impact is. U.S. Treasury Secretary Scott Bessent testifying in front of the House Appropriations Committee on the Hill, saying there are no signs of a recession. We're pleased to welcome Janet Mui, RBC Bruin Dolphin, Head of Market Analysis. And look, for a tech investor right now, the anxiety has been around valuations of big tech in this current environment. Do you think that we are out of the woods in a recessionary environment? Is that still too early to call?
Hi, Caroline. Thanks for having me. I think it's too early to call, but I think the base case is no recession. I think we saw from the latest labor market data that the job market is pretty resilient. And I think it will take a lot more pain for us to go into recession. And I understand, tariff is creating a lot of anxiety and obviously a lot of paralysis on trade flows and investment decisions. But there are also offsets that are happening. For example, significantly lower oil prices and potential tax package that is going to happen. And I think ex-US things are looking okay as well. So I think it's premature to conclude that there would be a US recession, but obviously the stakes are high.
Much has been said about the US as a government and it's buying or indeed pulling back on expenditure around Doge. We just had the IBM CEO join the show saying, look, he's more than confident that any new business within the US government he wins will offset for any contracts cut. You've got Palantir today once again showing real resiliency in their US government offering. How much are you seeing big tech being able to weather at the moment? Any dial back in government spending, but also private sector spending?
I think what we learned from the latest earnings results regarding the big tech is that the capex on AI remains unchanged. And in fact, I think there is still some pickup in that spending. So I think despite the distractions on tariff and the near-term cyclical outlook, I think the longer-term AI theme remains undebatable. And I think that's one area where it can really drive productivity. And I think this is an area that corporates are still very much intended and happy to spend on. So I think that long-term trend is intact. And I think despite the recent pause in some investment decisions, I think there's some area to be excited still about.
And it's interesting that, of course, that focus on spending had really benefited the hardware offering out there of late, or at least the chip design side when it was 2024. 2025, the outperformers have been software offerings such as IBM, which is up about 13% year to date, Palantir, that is still the best performer on the main benchmarks. Janet, is it still about a software win right now, or can you go back into the hardware?
I think in the near term, the software side will likely still outperform and be investors' preference, because primarily, if you think about it, it's the trade uncertainty that is top of mind. And there is some scale back of tariffs, but a big question mark remains. So on that side, you can argue that the software side is less impacted, right? So it's just logical to make that near-term conclusion. But having said that, I think on the hardware side, I think the valuations of some of those key infrastructure and chip design stocks have come down. And I think it is really quite fair in value, to be honest. A lot of the concerns on overvaluation has come back down a lot. So it also presents great opportunities for long-term investors because those are really great companies.
I'm going to go global with you, Janet, because you're based over the pond right now. And I'm interested in how tech in Europe has performed, because ASML, pin-up for the industry, it's down a lot this year. Has there been buying of Europe and other regions?
Overall speaking, I think the trend is that we are shifting a bit of more of our exposure from US to Europe. I think that's fair enough given what's happening at the moment. And I think for European tech, for example, ASML that you mentioned, those are global leaders, or in fact has a monopoly on the machine that produces all these chips. So I think, there are some concerns, near-term cyclical difficulty, but over the long term, we're still pretty confident on these sector leaders.
And what's so interesting, Janet, with your perspective, is you can go cross-asset for us. This week's been a big week for corporate debt sales from big tech. When you think about Apple coming after its earnings, we had Google last week, with first time in years. Have you seen more appetite across the full breadth of assets when it comes to technology?
Yeah, if you talk about corporate debt, right now we have a preference on government bond over corporates, just purely on the bond side. So, of course, it really depends on specific sectors and idiosyncratic issuers. But generally speaking, we don't think the corporate spreads reflect the potential recession risk. It's not a base case for sure, but I think we just have to be prepared for either scenario. So if we do go into recession or more economic slowdown, I think government bonds would be the place to be instead of corporate credit.
We're coming to the tail end of earnings. We still got AMD, ARM. You've, of course, got the juggernaut that is NVIDIA. But what are the catalysts for here on out at the moment? Is it fundamentals, or is it still the breakthrough when it comes to tariffs and to trade?
Well, I think for these individual stocks, the fundamentals will be absolutely important. I think so far, as I mentioned, I think the AI capex remains intact. But I think there's concern on profit margins, obviously, and also there are concerns from the Chinese competitors, etc. So I think we have to watch the fundamentals. But essentially, I think for macro investors, we'll still be looking a lot at what the Fed plans to do, for example, and watch out for really the near-term economic data from the US.
And let's just go there to the Fed. I mean, are you expecting any sort of hawkishness or a dose of dovishness coming out of the Fed tomorrow?
Well, to be honest, I think they're likely to stay on hold. And I think we shouldn't be overly excited about the potential for shifting to more dovishness, because I think given the inflation, and particularly I think consumer inflation expectation, it is really high at the moment. And I think there's a high bar for the Fed to switch to more dovishness. So I wouldn't bet on that yet.
Janet Mui, RBC Brew and Dolphin, great to have some time with you. Thank you very much. Now coming up, one of OpenAI's major stakeholders is the biggest holdout as the ChatGPT maker tries to restructure. We're talking Microsoft next. Meanwhile, keep an eye on what's happening with Tesla shares. We have seen yet further sales pressure over in Europe. Disastrous numbers coming out of not just Sweden and some of the Nordics, Denmark, but also in the UK as it finally turns negative as well in April in a big way. We're off by almost 2%. This is Bloomberg Technology. Time now for Talking Tech, and first up, Palantir. Well, shares are really driven lower today. That's after its financial results failed to live up to investors' loftiest expectations. Though the company bumped up its 2025 revenue forecast to about $4 billion, representing growth of some 36% from last year, valuation's just too high. We're off by 12%. Meanwhile, Google says it will appeal a federal ruling to break up its ad manager tech tool. Look, Google is arguing that the DOJ's remedies go far beyond the court's narrow ruling. And OpenAI has agreed to buy Windsurf, an AI-assisted coding tool formerly known as Codium, for about $3 billion, according to sources. This marks the ChatGPT maker's largest acquisition to date, and the deal has not yet closed. We'll have more on OpenAI in a moment, but now let's check in on these markets because we are under pressure. 0.6% off by the Nasdaq 100. We wait with bated breath. What will happen with the US-Canada meeting in terms of tariffs and trade talks? But what will happen with the Federal Reserve in terms of the direction of travel for rates? Will we get an inflationary sentiment? We'll get hawkish tone from Fed Chair Powell tomorrow. We are currently on tenterhooks with Bitcoin currently up 0.25%, 94,461. Coming up, an important conversation. The CEO of Ares Management, Michael Ogati, is going to be joining from the Milken Global Conference. This is Bloomberg Technology.
Welcome back. We are here at the Milken Global Conference, joined now by Ares Management CEO Michael Arrighetti. Thank you for joining us here on set.
Here. Good to see you again.
A lot of conversation going on. We have to start with tariffs. I mean, it's kind of taking up all the air in the room these days. What do you make of the strategy that you're seeing from the administration and how you as an investor react to it?
Yeah, look, we try to stay above the politics and just think about where the markets are going and how it affects capital flows in our business. I think the good news generally from an Ares perspective is the businesses that we invest in tend to be middle market service companies that have their customer base in local currency, local markets. So we don't really invest in a lot of companies that make things or have to grapple with supply chain issues or tariffs. So I think in terms of the first order impacts, we're pretty unaffected. Obviously, the longer that these trade imbalances go on and the trade war goes on, it affects everybody just in terms of the economic impact, and that's what we're keeping an eye out for. But so far, we're just kind of in a wait and see mode, and hopefully we'll get some information in the next week or two that'll give some people some clarity.
A lot of wait and see going around. What about the difference that you see between smaller and middle-sized companies and the larger ones? There's a lot of concerns that there will be a disproportionate impact to the changes in policy for those middle-sized companies.
Yeah, I'm not sure I agree with that. The reality is most middle market companies are insulated from some of the large cross-border impacts of the tariffs, and I could craft an argument that they're actually more protected in some respects from some of the issues that we're grappling with. That being said, if we start to head into a recessionary environment, they'll bear the brunt of it. So again, it could break either way, and we're just going to have to react to what the market gives us.
What do you make of the relationship that is changing between the two world economic superpowers, the U.S. and China? Of course, a lot of investors have looked more and more to China, to Asia more largely, but of course, the tariff escalation has not been helpful to that movement. Do you think that there's some reversal there that will happen in the future?
Look, we invest money on behalf of institutions and individual investors all over the globe. We have a large business in the Asia-Pacific region. You know, part of our business is benefiting in terms of people allocating to other regions of the world where we have capability and capacity. Our industrial logistics business is actually benefiting from some of the changes we're seeing around the global supply chain, nearshoring and reshoring and China plus one. So there's always going to be puts and takes. The reality is very few investors, U.S. dollar investors, have been investing into the China market over the last many years. So we're not really seeing that significant amount of disruption.
You know, it's interesting. At a time where a lot of people are looking around and seeing capital kind of frozen, you've actually raised a significant amount in places like private credit. What do you think you're doing differently here? And what does it mean for your ability to bring in more interest from investors for the rest of the year?
Yeah, we were fortunate. Last year we had a record year of fundraising. We pulled in about $93 billion of new AUM. This first quarter, we just had earnings yesterday. We added another $20 billion to the dry powder pile. We have about $145 billion to invest. I think what we're doing differently from a positioning standpoint is, number one, we have a broad, diversified global business. So I just think that we're giving investors a lot of choice as to where they want to play and what risks they want to take. As probably one of the pioneers or leaders in private credit, we're one of the few managers that actually has a track record that goes, you know, back 20, 30 years, where people can see how we've performed through cycles. And then, as we often talk with investors, if you look at our private credit strategies today, broadly across real assets and corporate, we're generating 12 to 15% rates of return right now. So on a relative value basis, I think with this amount of uncertainty on the forward path of earnings, valuations, I think most investors are just finding it, frankly, easier, you know, to take shelter in the credit markets and make those kind of low to mid-teens returns without having to worry about that equity risk premium.
Right. What's fueling that return? Is it because rates have remained higher ultimately?
Yeah, it's clearly a reflection of the base rate environment. Rates are now starting to drift down, as everybody knows, but as they are and concerns about economic weakness are seeping in, credit spreads are starting to widen out. So while rates are coming down, I think people felt the asset class was going to be much more rate sensitive than it actually is, because we're making up for that reduction with credit spreads widening.
As I talk to you and your peers, I can't help but think that there might be actually around the corner, in the wake of some of this turmoil, a golden opportunity that's forming to deploy larger and larger dollars, given how much valuations have corrected.
Yep.
What does that opportunity look like?
Yeah, look, I think we now, having been in business for 30 years, have seen that we actually have grown faster through periods of dislocation. So the fastest growth we ever had was through the GFC in terms of our profitability and our AUM. Second was through the COVID pandemic, and that's a combination of just the unique structures that we manage, the capabilities that we have. So typically whenever we have volatile markets or dislocation, it creates opportunity. What's unique about this moment is the amount of investments that have already been made in the private markets at high valuations that were reflecting the lower rate environment is of a magnitude that we haven't seen before. And so the resolution, if you will, of all of those assets that need to reset basis, we think is going to be a massive opportunity in places like secondaries, opportunistic credit, opportunistic real estate. So, you know, around the halls of Ares, we're actually quite excited about the future.
So secondaries is a good place to dive in for a moment here, because you are seeing a lot of limited partners looking to sell. Some of that is their own liquidity concerns that we're hearing about, but also, Mike, the private equity industry has been holding on to assets for years. The IPO window has not opened in a meaningful way. This was supposed to be the big year. It didn't happen, not really yet.
Yep.
M&A also pretty stalled. What does that mean for the private equity industry? Can they keep borrowing to keep the party going?
Yeah, I think they can. I mean, the financial incentives in private equity are aligned to long-term equity value creation, and that may require holding these assets for longer. There's a real tension in the market now from limited partners who want to see a return of capital before reinvesting. But the opportunities for liquidity have gotten much more innovative and creative and complex. So if you're a private equity GP, today the entire market, there's about $3+ trillion of private equity invested. 60% of that private equity is 4.5 years old or more. There's about $1 trillion of equity that has not been invested. And so the challenge that the private equity industry is facing is, do I take my $1 trillion and invest it into this new market where there's probably good opportunity, or do I use it to support valuation and growth in the existing portfolio? But you can't do both, and that's where secondaries comes in. So we're seeing significant demand from the GP community as well as the LP community to kind of figure out how to recapture some of that $3 trillion and get it back to investors.
If you had to describe that tension between investors and their private asset firms, what is it?
I'm not sure there's a tension. I actually think that most sophisticated LPs, which is largely all of them, understand the world that we live in, and I don't think that they want to see assets getting monetized at valuations that don't reflect the intrinsic value. That being said, they want to participate in this new vintage. And so if there's a tension, it's really, how do I capture this wonderful opportunity set that you just referred to without compromising value creation in the existing portfolio? And that's just a dialogue, you know, and GPs and LPs are all going to be in a, you know, different place depending on their liquidity or the age of their portfolio or frankly the performance of the underlying portfolio.
It's certainly the topic of the day, and Ares is right in the middle of it. Mike, we have to leave it there. We thank you so much for joining us here on set. That is Mike Arrighetti, of course, the CEO of Ares here at the Milken Global Institute. Back to you.
Shanali, thank you so much. Great interview. Let's check in the broader markets right now, because we have been under pressure. We're coming off of our lows, all in anticipation of the Fed tomorrow, and indeed what Treasury Secretary Bessent has been saying on the Hill. They've currently adjourned. We're off by 0.6%. Discussion about Doge, discussion about the United States not being in a recessionary path right now. We look at what individual stocks that are on the move, though. Interesting news around Microsoft, of course. We're currently trading flat on the stock, but they, of course, are a key backer of OpenAI. We know that yesterday OpenAI said that it's walked back part of its effort to create a more conventional for-profit company, but its restructuring plans still not received the blessing of a major stakeholder, who is Microsoft. We'll bring you more on that. But now Palantir is also sliding. The most in a year is sales forecast. They fall short of what is a very lofty valuation on this stock. More next. This is Bloomberg Technology. about DoorDash? It's on a bit of a buying spree following its earnings beat. It announced two multi-billion-dollar acquisitions, London-based delivery company Deliveroo for about $4 billion and hospitality tech company 7 Rooms for $1.2 billion. And the acquisitions will expand DoorDash's reach to over 40 countries. Let's get the inside track. Bloomberg's Natalie Leung. We start on the M&A before we go to the fundamentals. Why are they suddenly expanding outside the US, Natalie?
And so it really comes at a time where DoorDash is at a strong financial position. And it thinks it can go into the UK and sort of the more urban European markets and replicate that playbook that has took them to a dominant position in the US, where they cover 2/3 of the market.
Okay, so they expand globally now in 40 countries. They're adding on the ability to be, or booking your restaurant. With 7 Rooms had actually already been working alongside in partnership, and now they make the acquisition. Deliveroo's been bought. The shares are down on the day, though. Can you just talk about what the fundamentals are telling us right now?
Yeah, so they reported earnings today. The 2Q orders outlook was a beat. The adjusted EBITDA outlook was a bit conservative, with the midpoint missing analyst estimates due to the ongoing investment into these new international markets and businesses. And so analysts would be looking at, how they're going to, invest and spread across these markets as they grow in the coming years.
And just dig in a little bit as to why I want to be booking my restaurant via the app as well as getting the food sent to me via DoorDash. How is that the right sort of allocation of $1.2 billion?
Yeah, for DoorDash, this is really expanding their enterprise offerings for restaurants. This is not only a consumer-facing reservation platform like Resy or OpenTable, but it is also for restaurants to build up loyalty or reach customers more easily, like whether they're in restaurants or they're ordering on the DoorDash platform. So there's two sides of this here, both consumer-facing and a B2B side of it.
Natalie Leung, breaking it all down for us. We thank you. Let's turn our attentions to another set of earnings that seem to underwhelm investors. Shares of Palantir plunging after the company presented an earnings outlook that fell short of some pretty lofty expectations, I might add. Palantir is one of the most popular trades among retail investors, too. Let's just think about how smaller investors are reacting to the news. Amit Kukrager is with us, retail investor and CEO of AK Media. About 250,000 followers you've got across YouTube, across X. You are very popular for your thoughts on the stock among what, well, Dr. Karp himself has called a retail army. What did you make of the numbers today?
Hey, Carolyn, thanks for having me on the show. I've been covering the company for the better part of 5 years now, and I've been joined with a very passionate retail investor base. And there was something that retail saw in this stock when it was trading in the single digits that Wall Street did not see. Obviously, we've seen what has happened since then, and now Wall Street is buying it at a higher premium, but maybe that's because it deserves a higher premium. I mean, you're talking about a company that just did 39% year-over-year revenue growth, 71% U.S. commercial growth. The remaining deal value is up 127%. Their U.S. government business is now accelerating to 45% year-over-year growth. It's a company doing $900 million in revenue, nearly $900 million, with less than 800 customers. I know the valuation's aggressive here, but I think the growth is starting to warrant it.
Just to double click on the market capitalization of $255 billion. Look, the stock had run, what, excessively this year, many would say, more than 60% higher. No wonder we pull back a little bit. But I'm interested in your take, perhaps from some of the analysts out there. Jeffrey's saying, look, this is really a retail trade. I'm not hearing people talking about Palantir in the institutional market in any way the same amount that we're hearing in the retail community. Is that retail resilience there?
Well, if you look at the institutional and retail ownership split, it's 50-50. So this is not Tesla in 2019 where it was 70-30. I think there's a 50-50 split. So there's obviously institutional investors that are excited about the name. But in terms of the valuation, let's take a second and step back. OpenAI is worth $300 billion on the private markets, and they're not even profitable. AIG said this a month ago at their investor day, and Palantir quoted this in their slide deck in their earnings yesterday. AIG expects the adoption of an AI-powered underwriting solution leveraging AIP, Palantir's core software offering, to double its 5-year revenue CAGR from 10% to 20%. Alex Karp, the CEO of the company, has been saying that large language models largely are becoming commoditized. The implementation of them is what matters. I'm not saying the stock is cheap. I'm saying the aggressive obviously is, the multiple is aggressive, but it might be warranted because the implementation of AI is what really matters, and Palantir is delivering those results.
I suppose some area of concern is Europe and indeed international expansion. That's going to be the catalyst that maybe does start to have people going, oh yeah, it should be worth 56 times its 2026 revenue. When are we going to get that international edge in the same way that they've dominated the US?
Well, Alex Karp has said this many times, and he said this on the earnings call yesterday. Europe is in a crisis. They are not going to survive. At least their biggest companies in the world are not going to survive unless they embrace the AI revolution. We are seeing U.S. commercial CAGR at 71% for Palantir. That is because the United States is embracing the AI revolution. Alex Karp also said yesterday that governments across the world outside of Europe are starting to increase their, at least, inquisition of Palantir software offerings as well. Palantir recently just signed a massive NATO contract for their Maven platform. I think that we are going to start to see a growth spurt, an S-curve in Europe. It might take some time because there are still cultural differences, but eventually I think that's going to come through. And when that does come through, I think that's going to be another catalyst for Palantir.
Ultimately, we've already seen resilience shown with US government contracts in the face of Doge. But is there anything that gives you any skepticism about perhaps a pullback in spending from that side?
Not really. I mean, look, it was funny in February when there was a Pentagon headline that said the Pentagon's going to be cutting defense spending, and as a result, Palantir was down 10%. I think more realistically, if the government is going to become more efficient with their spend, you need to efficiently allocate that spend. I mean, this is one of the most logical things that Karp and Shyam Sankar, the CTO, have been talking about for a while. And so if we need a better allocation of capital to get more transformative results, I would imagine Doge would be a massive tailwind for Palantir versus a headwind. And as a result, I think that's why it's commanding its premium. In terms of the stock being down 15% right now, this is a stock that was up 70% from the lows in April. It's a stock that is up well above 10x from the lows of 2022, when the majority of people like myself actually took a chance on Alex Karp when Wall Street decided that he was crazy. So from that perspective, stocks go up and down. I think this is a reaction to numbers that maybe weren't as good as what the street wanted, but the quarter itself was phenomenal in terms of the actual business growth.
They beat. They raised for the full year as well. And you're right, the stock is still up more than 42% over the course of the year. It's still basically the best performing tech stock throughout what has been a pretty, shall we say, volatile state of trade. Is, from your perspective, going more broadly, this the name that the retail community still wants to be number one? Where else has retail been starting to put their bets when it comes to a tech ecosystem?
Yeah, I think it's Palantir. I think Alex Karp, when he speaks, people listen. I did philosophy and debate when I was in high school, and I was a nationally competitive debater. I was one of the top 3 speakers in Europe, top 7 debaters in the United States. When I discovered Palantir back in 2021, and I saw on their website that they referred to their data infrastructure as an ontology. And ontology is a philosophical word. Dr. Karp has a PhD in philosophy. Dr. Karp wrote a book called The Technological Republic. It was a #1 Times New York bestseller. When you talk about retail and what captures their interest, what captured my interest was this guy who did not care what anyone said. He was going to be himself. He was going to say his political beliefs regardless of what happened to the company. He had a backbone, is what I'm trying to say. And I think because Palantir is a backbone, I think because Alex Karp is ruthless about explaining what that mission is, that's why retail is attracted to the name, and the growth is there to justify why retail wants to bet on a tech stock that is actually accelerating in the age of AI.
Does retail want to bet on anything right now in this economic environment? What's the sentiment like more broadly, Amit?
Well, if you look at some of the JP Morgan data we got in April and April and March had $40 billion of net inflows from retail. April had about $42 billion of net inflows from retail. Hedge funds actually took down their positioning to the Max 7, the lowest since 2023. And hedge funds, a global data of 3,000 hedge funds showed that their short positioning on the broader S&P is at 2022 levels. So this is going to be a game of if retail is right on buying the dip and the tariff volatility is going to die down, which will allow valuations to become more mature, or if the hedge funds are going to be right. So far, we've recovered everything from the April lows. I mean, I could imagine hedge funds saying, oh, we missed it, we got to get back in, and that creates even more FOMO and momentum. But retail's been buying the dip, and I think they will continue to buy the dip, especially on Palantir.
See if they do today at the end of trade. Amit Kukreja, we thank you for your time, CEO of AK Media. Now, shares of Tesla lower today as sales continue to slide across Europe for the month of April. Now, this is despite the company rolling out an updated version of its popular Model Y SUV. Let's get out to Craig Trudell for more, because many blamed basically the lack of a fresh item to be able to buy into, the fact that they had to put on ice certain production. But now we get the tell that actually even with a new updated Model Y, people are still not buying.
Yeah, that's right. I think that was, kind of the big excuse that you could throw out in the first quarter was that we had this changeover for the Model Y that was going to inevitably lead to some lost production, and that sort of changeover is fairly common in the industry. It's maybe what was unique for Tesla is that the Model Y is just so important to the company, accounts for such a huge portion of their volume. And for them to have to take their production lines down at each of the factories that where they make the Model Y, which is in all of their assembly plants around the globe, that is a big deal for them. But by the time, March rolls around, you have the Model Y starting to spool back up, and, deliveries of that refreshed Model Y starting in early March. And so getting into April for sales to be this dramatically down is a troubling sign if you're a Tesla investor.
Dramatic to say the least. Sweden off by 81%, UK off by 62%. What real numbers are we talking here? How few cars are being purchased?
So in the UK, it was just over 500 units that they moved. So this is a really dramatic drop for the company. I think, this is a case here in Europe where you still see very patchy take up of electric vehicles, right? Where some smaller markets you have huge take up. I would point to Norway being the sort of bright example, to the positive. But in other markets, EVs are taking quite a while to accelerate. And, Germany and the UK, have sort of traded places in terms of being far and away the biggest within Europe, and for those countries to be included among some of these countries where we're seeing really dramatic declines is troubling, because that's where all the volume is in this region.
And the elephant in the room is Musk's political reputation thus far in Europe. That's what's crimping demand.
I think that's something that's, very much what is sort of top of mind for people following these developments is how much is he hurting the brand's standing? Because I think another important bit of context is the European market is just a heck of a lot more competitive than the US is, where a lot of European companies were bracing for this year being a much tougher compliance year. CO2 regulations were, scheduled to take this another sort of step up where you had to meet a lower CO2 standard for your fleet. It looks like the manufacturers are going to get some relief on that front, but it's sort of already the case that we're seeing the fruits of all the efforts of trying to meet those numbers. So, a lot of product has come to market. You have Chinese companies coming to market even in spite of tariffs. So Tesla has a lot more competition than they have elsewhere in the world.
We thank you so much on all things Tesla. Now, breaking news. We do see President Trump welcoming to the White House, of course, the new leader of Canada, Mark Carney. It was but a week after he won the national election, promising voters he is the man to guide Canada through the economic turmoil of the trade war, protect the company against aggression from the White House as they see it, exports in Canada plummeting, as it would seem, from the tariffs thus far. So currently have seen that continuation of dialogue between Mark Carney and President Trump. But now let's return to the markets that are on tenterhooks because of trade, because of tariffs, because of what this very meeting wants to be delving into between the two leaders. And we have some earnings after the break as well to keep your eyes on. AMD off by 1.5%, key chip maker. What will they say about AI demand? Can they too manage to shake off some of the anxiety as we saw with Microsoft and Meta last week? ARM also chip designer off by 0.4%. Watch it after the bell. From New York, this is Bloomberg Technology.
Welcome to Bloomberg Markets. I'm Scarlett Fu in New York. A busy hour ahead of us as we take you live to Beverly Hills for day 2 of the Milken Institute Global Conference. You'll hear from Eldridge Industries co-founder and CEO Todd Boehly, TCW CEO Katie Koch, Franklin Templeton President and CEO Jenny Johnson, Global Head of the Client Solutions Group at Goldman Sachs Asset Management, Matt Gibson as well. We'll also be tracking the meeting between President Trump and Canada's new Prime Minister Mark Carney at the White House. Data out today show Canadian exports to the U.S. tumbled in March. They plunged 6.6%, the most since the pandemic, while imports fell almost 3%. We'll bring you any comments from the two leaders as they meet this hour. So, where does that leave the U.S. trade balance? The trade deficit widened to a record $140.5 billion in March. The goods and services trade gap grew 14%. That was more than economists had expected, driven by companies rushing to import products like pharmaceuticals before the announced tariffs in April. Now, comments on trade also moving the markets this morning. We saw stocks coming off their lows as Treasury Secretary Scott Bessent reiterated in his testimony on Capitol Hill that trade deals may come as soon as this week. Take a listen to what else he said.
There are 18 very important trading relationships. We are currently negotiating with 17 of those trading partners. China, we have not engaged in negotiations with as of yet. So I expect that we can see a substantial reduction in the tariffs that we are being charged.
All right, so here's where things stand when you look at the markets. The S&P 500 had fallen as much as 1.1%, more than cutting that decline in half, now down about half of 1%, following those Bessent comments. Oil prices rebounding from a 4-year low with WTI back above $59 a barrel. Yields at the long end are rising ever so slightly. Oh, actually, they've turned around. They're now falling. Little change, really, at this point. The 10-year yield at 4.34%. And the U.S. dollar drifting lower for a third day with the Bloomberg Dollar Index off by 0.1%. As promised, we want to go back now to Beverly Hills and the Milken Institute Global Conference, where our own Shanali Basak is there with a special guest. Shanali.
Scarlett, thank you so very much for your time here. Of course, I am joined at the Milken Global Institute by Eldridge CEO Todd Boehly, and you have a very vast empire here. When you think about private equity, credit markets, let's just quickly start with tariffs, because this is something every investor has to grapple with in this era. What do you think of the administration's strategy?
I think that a reset is valuable, and I think we're going through a mark-to-market adjustment. And I think we're starting the conversation. You know, I think we're going to see action over the course of the next couple of weeks. And I think that's going to bring a lot of confidence back to the markets. And I just believe that this is ultimately a reset was required. With 37 trillion of debt growing at, a 7% rate, I think that's unsustainable. And I think everyone agrees with that. And I think wondering where all our money is going, is a good question, because I don't think the average person, me included, could really talk very specifically about how all our money disappears and where it goes and what does it do. So I think having a big reset right now is a good thing to be doing. And I think if you look at the 3 pillars, right, you've got trade, tax, and deregulation. Trade's on its way. The tax progress seems like it's promising, and then deregulation's already occurring. So I think those 3 pillars are ultimately going to result in a very successful outcome.
It's interesting. Even people who believe in the tariff strategy still say that it could get messy, that it could be volatile. The big question is how messy? What are you seeing across your portfolio companies or even those of others that signal perhaps future pain, if there is any?
I think there's uncertainty, and more uncertainty than usual. And I think if you're an importing product, we saw it a little bit, and we're building the Delano Hotel. We're remodeling it in Miami. So our costs are probably $3 million higher than we predicted. So we're seeing it real time, as we complete these projects. Obviously, if you're, making toys in China, that's going to affect you. But I think a lot of it is just about, a big reset and trying to figure out, what's best for the future. And democracy is messy. So I think every element of democracy is messy. And when you're trying to make decisions, and by the way, you're also doing it under very short time frames, I think that's going to be messy when you have these mark-to-market adjustments.
It's interesting. To the outside world, people want to view you as a Dodgers owner and an owner of Chelsea, but you're also very steeped in the credit markets. It's kind of where you cut your teeth. You've been in this business a really long time. Moments like these tend to be moments where investors like you dive in. What kind of opportunity are you seeing out there?
We're seeing good opportunity. I think we're seeing unique deal flow come to us that we're really trying to capitalize on. And I think we have the ability to scale very quickly. So right now we've seen 2 or 3 various opportunities. We just backed the #1 European rocket company called ISAR, and they just had their first launch, and it was very successful. But of course, we've played into this theme right now where one of the other things that the administration is doing is waking up the rest of the world. So Germany's really coming to the table and saying, all right, we want to get active. So our German rocket company, we think, is extremely well positioned. We have 3 or 4 of these examples where we think we've caught something that, we're right on the perfect timing of, and we're going to be able to scale it up right at the time markets are pulling back.
So what does this mean for your plans for Eldridge? Now, it's interesting, especially talking to you days after Warren Buffett said he was stepping down as the CEO of Berkshire, to see you build another company in the likeness of Berkshire in a lot of ways. What are your plans for that company? What can you tell us about a potential to IPO or even sell?
Yeah, I think our goal is really just keep compounding. We've been compounding at basically 20% since we started. Our business we started was worth roughly $2 billion. It's worth roughly 15 today. And I want to just keep compounding. When I turn 80, I want it to be worth $1 trillion. That's my goal. And if I compound at 15% from now till then, that really will happen. I think if you go back and you look at Berkshire, in 1992, Berkshire was worth $11 billion. 99.5% of Warren's wealth came after he became 50. So, longevity is really important. And so, my goal is to live a long time and compound a long time. I enjoy what I do. I don't see it as work. I'm passionate about it, and I get stimulated by the activity.
So I want to also comment on some other parts of your empire over your various companies here. So sports in particular. People are keeping a close eye on Chelsea, of course, and your involvement in it. What can you tell us about your plans, especially the stadium plans that are surrounding Chelsea and the relationship you have with your co-owners?
Yeah, I think everything's good and stable. I think we're going to sit and wait. We've got 3 more games for the season, and then we'll sit back down and talk about the future of the stadium. The future plans. I think everyone recognizes that a club as big as Chelsea should have a stadium that reflects the size of the club. And ultimately, that's going to be a strategic advantage. So we have to figure that out over the longer term.
But do you think that those plans will be put off until the end of the season here? How long will it take it to come to fruition?
Oh, it's a year. It's years, in the making. When we originally bought the club, I think we agreed that we had 15 or 20 years. I can't remember exactly to figure this out. But it's a big project in a really interesting city like London, where there's a lot of constituencies that have an opinion, and obviously the #1 constituency for us is our fan base and what's going to be the best for Chelsea.
Todd, we have to leave it there. That is Eldridge CEO and Chairman Todd Boehly. Scarlett, back to you.
All right, thank you so much, Sonali Basak in Beverly Hills. We want to take you now to the White House in the Oval Office where President Trump is speaking as he meets with Canadian Prime Minister Mark Carney. Let's take a listen.
Over some of the beautiful pictures that were stored in the vaults that were for many, many years, in some cases over 100 years. They were stored in vaults of the great presidents or almost great presidents, all having a reason for being up, every one of them. So it's very interesting. But I just want to congratulate you, and ran a really great race. I watched the debate. I thought you were excellent, and I think we have a lot of things in common. We have some tough points to go over, and that'll be fine. We're going to also be discussing Ukraine, Russia, the war because Mark wants it ended as quickly as I do. I think it has to end. We had some very good news last night. The Houthis have announced that they are not, or they've announced to us at least, that they don't want to fight anymore. They just don't want to fight. And we will honor that. And we will stop the bombings. And they have capitulated. But more importantly, we will take their word. They say they will not be blowing up ships anymore. And that's what the purpose of what we were doing. So that's just news. We just found out about that. So I think that's very, very positive. They were knocking out a lot of ships going, as you know, sailing beautifully down the various seas. It wasn't just the canal. It was a lot of other places. And I will accept their word, and we are going to stop the bombing of the Houthis. Effective immediately, and Marco, you'll let everybody know that, okay? Do you have something to say about that, by the way? It's a pretty big announcement.
Yeah, this was always a freedom of navigation mission. These are, a band of individuals with advanced weaponry that were threatening global shipping, and the job was to get that to stop. And if it's going to stop, then we can stop. And I think it's an important development.
And we'll have maybe before we're going to, as you know, the Middle East, Saudi Arabia. We're going to UAE and Qatar, and that'll be, I guess, Monday night. Some of you are coming with us. I think before then we're going to have a very, very big announcement to make, like as big as it gets, and I won't tell you on what, but it's going to, and it's very positive. I'd tell you if it was negative or positive. I can't keep that out. It is really, really positive. And that announcement will be made either Thursday or Friday or Monday before we leave. But it'll be one of the most important announcements that have been made in many years about a certain subject, very important subject. So you'll all be here. Mark, would you like to say a few words?
Well, thank you, Mr. President. I'm on the edge of my seat, actually, for the big announcement. But thank you for your hospitality and above all, for your leadership. You're a transformational president, focus on the economy with a relentless focus on the American worker, securing your borders, ending the scourge of fentanyl and other opioids, and securing the world. And I've been elected with my colleagues here, with the help of my colleagues here. I'm going to spread the credit to transform Canada. With a similar focus on the economy, securing our borders, again on fentanyl, much greater focus on defense and security, securing the Arctic and developing the Arctic. And the history of Canada and the U.S. is we're stronger when we work together, and there's many opportunities to work together. And I look forward to, addressing some of those issues that we have, but also finding those areas of mutual cooperation so we can move forward.
That's great. Very nice. Thank you very much. It's a very nice statement. Anybody?
Is USMCA dead?
No, it was actually very effective, and it's still very effective, but people have to follow it. So, that's been a problem. People haven't followed it. But it was a transitional step a little bit, and as you know, it terminates fairly shortly. It gets renegotiated very shortly. But I thought it was a very positive step from NAFTA. NAFTA was the worst trade deal in the history of our country, probably in the history of the world. And this was a transitional deal, and we'll see what happens. We're going to be starting to possibly renegotiate that if it's even necessary. I don't know that it's necessary anymore, but it served a very good purpose. And the biggest purpose it served is we got rid of NAFTA. NAFTA was a very unfair deal for the United States. A very, very terrible deal. It should have never been made. It was made many years ago, but it should have never been made.
Canada and the United States, would you like to see your first trade deal be with Canada, our neighbors in the world?
I would love that. Look, I have a lot of respect for this man, and I watched him come up, in a sense, through the ranks when he wasn't given much of a chance, and he ran a really great campaign. He did a really great debate. I think that debate was very helpful. I was going to raise my hand. I don't know if that's good or bad. I shouldn't say that. That might hurt you. But no, he ran a really great election, I thought. And yeah, something could happen. Something could happen. Yeah, please.
What's the top concession you want out of Canada? The top concession you want out of Canada?
Concession?
Yes.
Friendship.
But that's not a concession.
No, we're going to be friends with Canada. Regardless of anything, we're going to be friends with Canada. Canada is a very special place to me. I know so many people that live in Canada. My parents had relatives that lived in Canada, my mother in particular. And no, I love Canada. I have a lot of respect for the Canadians. Wayne Gretzky, I mean, how good, the great one. You happen to have a very, very good hockey player right here on the Capitals, who I have a lot of respect. He is a big, tough cookie, too. He just broke the record. And he's a great guy. And, you know, we had the team here, and I got to know a lot of the players. But now, Canada is a very special place. Yeah, please.
Mr. President, and Mr. Prime Minister, I'd like to get your response to this too. But Mr. President, you have said that Canada should become the 51st state.
Yeah. No. Well, I still believe that, but you know, it takes two to tango, right? But no, I do. I mean, I believe it would be a massive tax cut for the Canadian citizens. You get free military, you get tremendous medical cares and other things. There would be a lot of advantages, but it would be a massive tax cut. And it's also a beautiful, you know, as a real estate developer, you know, I'm a real estate developer at heart. When you get rid of that artificially drawn line, somebody drew that line many years ago with like a ruler, just a straight line right across the top of the country. When you look at that beautiful formation when it's together, I'm a very artistic person, but when I looked at that beauty, I said, that's the way it was meant to be. But, you know, I do feel it's much better for Canada. But we're not going to be discussing that unless somebody wants to discuss it. I think that there are tremendous benefits to the Canadian citizens, tremendously lower taxes, free military, which honestly we give you essentially anyway because we're protecting Canada if you ever had a problem. But I think it would really be a wonderful marriage because it's two places that get along very well. They like each other a lot.
Well, if I may, as you know from real estate, there are some places that are never for sale.
That's true.
We're sitting in one right now, you know, Buckingham Palace that you visited as well.
That's true.
And having met with the owners of Canada over the course of the campaign last several months, it's not for sale, won't be for sale ever. But the opportunity is in the partnership and what we can build together. And we have done that in the past. And part of that, as the President just said, is with respect to our own security. And my government is committed for a step change in our investment in Canadian security and our partnership. And I'll say this as well, that the President has revitalized international security, revitalized NATO, and us playing our full weight in NATO, and that will be part of it.
That's true. And they have, I must say, Canada is stepping up the military participation because Mark knew, you know, they were low and now they're stepping it up, and that's a very important thing. But never say never. Never say never.
What would it take to get the tariffs off of Canada?
Well, we'll be talking about different things. Like, you know, we want to protect our automobile business, and so does Mark. But we want to make the automobiles, and we want to, you know, we have a tremendous abundance of energy, more than any country. We have, just in Alaska alone, ANWR has been reopened now. ANWR is probably the largest find anywhere in the world. They say it's larger than Saudi Arabia. I don't know, but it's a lot. But we have tremendous amounts of energy. Other countries don't. We're both lucky in that way. They have energy. We have energy. We have more than we can ever use and more than we could ever sell, actually. And you have the same thing. Yeah. So we're two countries that are very lucky. If you look at China, they don't have that. You know, it's a big disadvantage. Other countries, most countries don't have. You know, most countries don't have that. So Canada and us, we have a lot of advantages over other places.
When you consider what Mr. Carney just said, that Canada is not for sale, does this make the discussion a little more difficult to start on?
No, not at all. No, not at all. No, time will tell. It's only time. But I say never. I've had many, many things that were not doable, and they ended up being doable. And only doable in a very friendly way. But if it's to everybody's benefit, Canada loves us and we love Canada. That's, I think, the number one thing that's important. But we'll see. I mean, over time, we'll see what happens. China.
I was hoping you can clarify something. Earlier this morning in Capitol Hill, Secretary Bessent said that they're having no negotiations here with China. You have said something different.
They want to meet, and they're doing no business right now. And those ships are turning around in the Pacific Ocean. Big turn. Those are big ships. Those ships take about 10 miles to turn. And, we lost $1 trillion to China on trade because of an incompetent president that we had who preceded me, grossly incompetent. You're finding it out more and more now. And by not trading, we're losing nothing. So we're saving $1 trillion. It's a lot. But they want to negotiate and they want to have a meeting, and we'll be meeting with them at the right time.
But you haven't met with them yet.
I have not met with them, of course. You would know if I met. I'd tell you they want to meet. But, we are right now, look, they're suffering greatly. Their economy is suffering greatly because they're not doing trade with the U.S. And they made most of their money off the U.S. Don't kid yourself. They don't make the money off other countries like this. And we had a trade imbalance. We had a deficit, or they had a surplus, another way of saying it, of more than $1 trillion. Think of it, more than $1 trillion. And because of 145%, that's the only reason, but because of they have now 145% tariff, there's no trading. You can't trade with 145%. We are, therefore, making, in a certain way, I guess, $1.1 trillion. In other words, we're not losing $1.1 trillion. Our deficit is much better. When I started, I say we were losing billions of dollars a day on trade. That's rapidly turning around. We looked at numbers this morning. So we were losing, the United States during Biden was losing more than, I won't even give you numbers because they're so embarrassing, but billions of dollars a day on trade. Those numbers are rapidly turning between the tariffs. Don't forget, we're now getting 25% on cars, 25% on aluminum, 25% on steel, and maybe more importantly, massive numbers of companies are moving into the United States. Honda, we have tremendous, the car companies are moving in at levels we've never seen before. The biggest investment ever made in the United States is being made right now. Trillions of dollars. I would say we could be at $9 trillion. You could go back to other presidents. They haven't had $1 trillion for their entire term. Look at Biden. He had bad numbers. People were leaving. They weren't coming in. They were leaving with Biden, and he didn't know the difference. The only thing he knew is people coming in. You know who they were? Illegal immigrants, okay, from prisons, from mental institutions, from all sorts of places that weren't good, from gangs, from Venezuela. They were coming in and they were criminals and murderers, 11,888 people that murdered, and at least half of them murdered more than one person. This is what Biden led into our country. I'm bringing in big companies. We have Apple is investing $500 billion. We have Jensen, as you know, is going to be 500 biggest chip maker, or chip thinker, I call him. He's really a thinker more than a maker. But we also have the maker, Mr. Wei. I get to know them all in the last, it was a cram course, but they're all moving into America because of the tariffs. And I don't think people have appreciated it. Some people do, some of the smart people do. So we have more money coming in. It's really an amazing thing. We have more money being invested in the United States now than at any time ever before in our history, and it's not even close. And I think the real number could be 9 or 10 trillion. We don't know everybody that's doing it. We have many. I just heard about a plant that's being built right now, a very, very top-of-the-line company, and they didn't come to the White House. They're just doing it because they're making it because if they build here, there are no tariffs. And this is the big market. This is the market. That sets us apart from it. This is the market where everyone wants to be. Now, if I didn't come here and do this, all of a sudden we wouldn't be the market where everyone wants to be. So we're able to do it in time. But we're going to have a great announcement. And I'm not necessarily saying it's on trade. Going to the beginning, we're going to have a great announcement over the next few days, an announcement that will be It was so incredible, so positive. And I'm not saying, I don't want you to think it's necessarily on trade. Just to finish, we also have a situation, because everyone says, when are you going to sign deals? We don't have to sign deals. We could sign 25 deals right now, Howard, if we wanted. We don't have to sign deals. They have to sign deals with us. They want a piece of our market. We don't want a piece of their market. We don't care about their market. They want a piece of our market. So we can just sit down, and I'll do this at some point over the next 2 weeks, and I'll sit with Howard and Scott and with our great vice president, who has done a really good job. We have some good news to report on a lot of fronts. But JD will be there, and Marco, and we're going to sit down, and we're going to put very fair numbers down, and we're going to say, here's what this country, what we want, and congratulations, we have a deal. And they'll either say, great, and they'll start shopping, or they'll say, not good, we're not going to do it. I said, that's okay, you don't have to shop. Now, we may think, well, they have a right, that maybe we were a little bit wrong, so we'll adjust it. And then you people will say, oh, it's so chaotic. No, we're flexible. But we'll sit down, and we'll, at some point, in some cases, we'll sign some deals. It's much less important than what I'm talking about. For the most part, we're just going to put down a number and say, this is what you're going to pay to shop. And it's going to be a very fair number. It'll be a low number. We're not looking to hurt countries. We want to help countries. We want to be friendly with countries. But you keep writing about deals. When are we going to sign? When? It's very simple. We're going to say, in some cases, we want you to open up your country. In some cases, we want you to drop your tariffs. I mean, India, as an example, has one of the highest tariffs in the world. We're not going to put up with that. And they've agreed already to drop it. They'll drop it to nothing. They've already agreed. They would have never done that for anybody else but me. So we're going to put down some numbers, and we're going to say our country is open for business. And they're going to come in, and they're going to pay for the privilege of being able to shop in the United States of America. It's very simple. It's very simple. So I wish they'd keep, stop asking, how many deals are you signing this week? Because one day we'll come and we'll give you 100 deals. And they don't have to sign. All they have to do is say, oh, we'll start sending our ships right now to pick up whatever we want or to bring whatever we want. It's very, very simple. And I think my people haven't made it clear. We will sign some deals, but much bigger than that is we're going to put down the price that people are going to have to pay to shop in the United States. Think of us as a super luxury store, a store that has the goods. You're going to come and you're going to pay a price, and we're going to give you a very good price. We're going to make very good deals, and in some cases we'll adjust. But that's where it is. And we've been ripped off by everybody for 50 years, and we're just not going to do that anymore. We can't do that. And we can't let any country do that to us. We're just not going to do it anymore.
Can you tell us a bit more about the deal that you've reached with the Houthis?
No, it's not a deal. They've said, please don't bomb us anymore, and we're not going to attack your ships.
And where did you hear about that?
It doesn't matter where I hear it. The very good source, I could tell you. Very, very good source. Would you say, Marco? I would say pretty good, right, JD? A very good source. No, they don't want to be. They don't want to be. They don't want to be bombed anymore. I sort of thought that would happen. No, behind you, please.
Clarifying something you said on USMCA. Is the U.S. prepared to walk away from that pact?
From what pact?
USMCA.
No, it's fine. It's there. It's good. We use it for certain things. It's there. We have the USMCA is a good deal for everybody. I won't say this about Mark, but I didn't like his predecessor. I didn't like a person that worked for. She was terrible, actually. She was a terrible person. And she really hurt that deal very badly because she tried to take advantage of the deal and she didn't get away with it. You know what I'm talking about. But so, we had a bad relationship having to do with the fact that we disagreed with the way they viewed the deal. And we ended it. We ended that relationship pretty much. The USMCA is great for all countries. It's good for all countries. We do have a negotiation coming up over the next year or so to adjust it or terminate it.
Yeah. Mr. President, I'll say a word on USMCA, if I may, Mr. President. It is a basis for a broader negotiation. Some things about it are going to have to change. And part of the way you've conducted these tariffs has taken advantage of existing aspects of USMCA. So it's going to have to change. There's other elements that have come, and that's part of what we're going to discuss.
Right. During the campaign, Prime Minister Carney talked about the American vitriol. How do you react if Canada decided not to shop in the American store as much as before and decided to partner with other countries?
Well, we don't do much business with Canada from our standpoint. They do a lot of business with us. We're at like 4%. And usually those things don't last very long. You know, we have great things, great product, the kind of product we sell nobody else can sell, including military. Look, we make the best military equipment in the world, and Canada buys our military equipment, which we appreciate. But we make the best military equipment in the world by far. The missiles, the submarines, everything. Everything we have is really top-notch. I rebuilt our military during our last term. Stupidly, we gave some away to Afghanistan, which shouldn't have happened. But that was, I think it was the most embarrassing moment in the history of our country. It was just very incompetent people. But if you look, the man that's now the head of our Joint Chiefs, he led the attack on ISIS for me. That's why he's the head of the Joint Chiefs. And Raisin Kane, he was unbelievable. And as you know, we defeated ISIS in 3 weeks. It was supposed to take 5 years. We did it in 3 weeks. And he ran the campaign. I said, I like him. But I knew him before. I went to Iraq, and we agreed to a plan, and that was the plan. And as you know, we did it in record time. So we have, you know, we have the best equipment in the world. We have the best, a lot of things. And but Canada, it does a lot more business with us than we do with Canada. Yeah.
Mr. President, your investments, Mr. President. When do you think the investments that you've announced, the trillions, will finally hit economic data this year?
When you're saying about the tariffs?
No, about the investments that you've announced.
Oh, it's hitting right now. Look, they're already starting AI plants. These are not people that look for financing. That's a good thing. You know, in real estate, you get a site, then you have to look for financing. You have to get your zoning. You know, 5 years later, you start building. You get a bank, then the bank's no good. These people have massive amounts of cash. The CHIPS Act was a ridiculous thing because that doesn't get them to build. All we did is hand very wealthy companies money. The CHIPS Act that was done by Biden, billions. We give them billions of dollars. They don't even have to do anything with it. And then if you weren't, if you didn't have, and I don't want to be a wise guy, but if you didn't go with the DEI, if you didn't go with all of the different things woke, if you weren't woke, you couldn't even use the money. You had to have a certain percentage of this and that and that and that. It's impossible. Impossible to have. The companies actually complained to me. They said they gave me all this money, but nobody can get these people to do anything. I mean, look, President Obama, and if he wanted help, I'd give him help because I'm a really good builder and I build on time, on budget. He's building his library in Chicago. It's a disaster. And he said something to the effect, I only want DEI, I only want woke. He wants woke people to build it. Well, he got woke people, and they have massive cost overruns. The job is stopped. I don't know. It's a disaster. And I don't like that happening because I think it's bad for the presidency that a thing like that should happen. He's got a library that's a disaster. And he wanted to be very politically correct, and he didn't use good, hard, tough, mean construction workers that I love, Marco. I love those construction workers. But he didn't want construction workers. He wanted people that like never did it before. And he's got a disaster in his hands, like millions of dollars, really many millions of dollars over budget. And I would love to help him with it, or somebody else. I could recommend professionals, but it was not built in a professional manner. By the way, nor was in California a little train going from San Francisco to Los Angeles that's being run by Gavin Newsom, the governor of California. Did you ever hear of Gavin Newsom? He has got, that train is the worst cost overrun I've ever seen. It's like totally out of control. So then they said, all right, we won't go into San Francisco. We'll stop 25 miles short. And we won't go into Los Angeles. We'll stop 25 miles short.
All right, you are listening there to President Trump speaking at the Oval Office with Canadian Prime Minister Mark Carney. They made some comments regarding U.S. and Canadian trade, with the president saying that they need to discuss USMCA renegotiating that. Mark Carney also said that